Okay, so let's unpack this. I mean, you probably know exactly what your credit score is, right?
Yeah. Or at least most people have a pretty good ballpark idea of what it is.
Right. It's that three-digit number we're all basically taught to obsess over from the very minute we get our first credit card.
Yeah, exactly.
You want a mortgage? They check the score. You want a car loan? They check the score. It is like the ultimate financial gatekeeper. But here is the huge blind spot we're looking at today. Do you know your banking score?
And that's the question that catches, almost everyone completely off guard.
Oh, for sure.
Because we just operate under this assumption that opening a basic checking account is practically a universal right.
Yeah, you just walk in.
Right. If you have the initial deposit and, a valid ID, you fully expect to walk out of there with a debit card and an active routing number.
Yeah.
But there is this massive, totally invisible mechanism operating behind the scenes that most of us are just completely oblivious to.
And that invisible mechanism is exactly what we're exposing in our deep dive into the source material today. We are looking at a specialty consumer reporting agency called ChexSystems.
Yes, ChexSystems.
So the goal here is to really figure out exactly how this hidden gatekeeper tracks your money, why it might, blacklist you without you even realizing it, and, well, what you can do to fight back if you suddenly find yourself on the outside looking in.
And the reason this is so critical for you to understand, really, is the element of surprise. Most people only discover that ChexSystems even exists at the exact moment they are denied a bank account.
Wow, just out of nowhere.
Exactly. You go into a branch to do a totally routine errand. Maybe you just moved to a new city, or you found this great high-yield savings account you want to take advantage of.
Yeah, just running a standard Tuesday afternoon chore.
Right. And suddenly the teller tells you they just can't open the account. No real explanation, just a hard rejection. It completely turns your day into a sudden, disorienting financial crisis.
Because, suddenly you can't set up direct deposit for your new job. You can't easily pay your rent. The domino effect is just immediate.
It's a nightmare.
But before we get into the fallout of all that, let's look at the actual mechanics here. What is the system actually actively looking for? Because they aren't looking at your credit card usage, right? Or whether you paid your mortgage on time.
Not at all, no.
No.
ChexSystems is strictly categorized as a specialty consumer reporting agency, and it's focused almost entirely on your deposit and debit history.
Okay, so it's all about cash flow.
Exactly. They are tracking the mechanics of how you handle cash flow. Because when you open a checking account, the bank isn't just, taking your money to hold it. They are managing the liability of your transaction behavior.
Right.
So the system is looking for a really specific set of behaviors that suggest you are, a liability to that institution's bottom line.
The red flags.
Oh.
Or I think the financial industry politely calls them blemishes.
Yes, blemishes.
But we aren't talking about, a simple typo on a deposit slip here. We're talking about unpaid negative balances, specifically those brutal overdraft fees that just pile up.
That's the big one.
Right. They are tracking non-sufficient funds activity, return checks, suspected fraudulent activity, and involuntary account closures.
Yeah, that involuntary closure is a huge trigger.
Basically, if a bank had to forcefully shut down your account because it went into the red and you just never brought it back to a positive balance, ChexSystems logs that data.
They absolutely do. And to understand why this matters so much to them, you have to think about the settlement risk the bank is taking on.
Okay, settlement risk. Explain that.
Well, when you swipe a debit card or write a check, the funds don't instantly move from point A to point B in reality. There is a whole clearing process.
Right, it takes a few days sometimes.
Exactly. And during that window, the bank is essentially fronting the trust that your money is good. So if you have a history of writing checks that bounce or consistently overdrawing your account and abandoning the negative balance, yes, you represent a direct statistical potential for financial loss to any institution that gives you an account.
It makes me think of ChexSystems as a notoriously strict bouncer at a nightclub.
Oh, I like that.
But a bouncer who is plugged into this citywide surveillance network, right?
Yeah. Yes.
So if you go to Club A, you have one too many, you smash a table and get kicked out, let's call that an unpaid overdraft fee. You might think, well, fine, I'll just walk down the street to Club B.
But you can't.
Right, because the bouncer at Club B is already holding a clipboard with your name on it. They know exactly what you did at the last place, and they are stopping you at the door. You aren't getting in, period.
That network effect is precisely how it functions.
Yeah.
The banks feed your behavioral data into ChexSystems, and in return, ChexSystems provides data to the banks whenever someone applies for an account.
It's a two-way street.
Exactly. It's this massive industry-wide feedback loop designed to basically insulate financial institutions from high-risk depositors.
Okay, but wait. If they are assessing risk, there has to be some sort of grading scale, right? How exactly is this data quantified?
It is quantified, yeah.
Because if it's just a raw list of mistakes on a clipboard, how does a random bank teller know where to actually draw the line?
So they quantify it by issuing what is called a consumer disclosure report, which ultimately generates a specific consumer risk score.
Okay.
And that score ranges from 100 to 899.
Hold on. Wait. 100 to 899. That looks incredibly similar to a standard FICO credit score range, which, usually goes from 300 to 850.
It does look similar, yes.
Are banks essentially just using this as like a shadow credit score? Like, is this a backdoor way of judging someone's overall financial worthiness without technically pulling a hard credit report?
Well, it is a parallel system, but it is distinct. It's not a shadow credit score because it measures a fundamentally different type of behavior.
Okay, how so?
A credit score measures your willingness and ability to repay borrowed money over long periods of time. The ChexSystems score, on the other hand, measures your reliability in handling immediate cash flow and deposit liabilities.
Gotcha. So it's about cash, not debt.
Right. So a higher score closer to that 899 mark means you present a much lower risk of causing a logistical or financial headache for the bank. Yeah. But the consequences of a low score are arguably just as severe as having terrible credit.
Because you literally can't put your money anywhere.
Exactly. A denial pushes you directly into the unbanked category.
And the numbers on that are staggering, honestly. Looking at the 2023 FDIC survey data from our source material, 4.2% of U.S. households are completely unbanked.
Yeah, that's a massive group of people.
It translates to roughly 5.6 million households operating entirely outside the traditional banking system. 5.6 million families who cannot write a check, cannot easily receive a direct deposit, and cannot swipe a standard bank debit card.
And this is where we really have to look at the macroeconomic reality of being unbanked. It is not just an inconvenience. It is a poverty trap.
Yeah, it really is.
Because the modern economy is completely designed for digital bank-to-bank transfers. When you are locked out of that infrastructure, you are forced to rely on alternative financial services just to handle routine, everyday transactions.
We're talking about like check cashing storefronts, payday lenders, having to pay for money orders just to cover your electricity bill.
Precisely. Think about it. If you don't have a bank account and you receive a paper paycheck from your employer, you have to take it to a check cashing service.
Right. And they take a cut.
A big cut. They might charge you 2% or 3% of the total check just to hand you your own money.
Wow.
If you make $40,000 a year, you could be losing over $1,000 annually just for the privilege of accessing your wages.
Just to get your own money. That's wild.
And then, you have to buy money orders to pay your rent, which costs even more in fees. It forces people into this parallel, fee-heavy economy that essentially drains wealth from the individuals who are already the most financially vulnerable.
Which brings us right back to that confusion between credit and banking history, right? Because I think a lot of people assume that if they are doing well in one area, it covers up mistakes in the other.
Yeah, that's a very common misconception.
Let's really clarify this for you, the listener. You could have a perfect 800 FICO score. You could be like paying your mortgage on time, never carrying a balance on your rewards credit card, essentially being a total model citizen in the lending world.
Absolutely.
But if you had a messy breakup, say 3 years ago, and you forgot to close an old checking account, and it racked up maybe $150 in overdraft fees that eventually led to an involuntary closure,
you will likely be rejected for a new checking account today.
Man.
Excellence in the credit silo does not erase a failure in the banking silo. They simply do not talk to each other in that way.
So they're completely walled off from one another.
Yes. The major credit bureaus, Equifax, Experian, and TransUnion, they store information that is entirely separate from the deposit data stored by ChexSystems.
That is terrifying. It means you have this entirely separate financial identity floating out there that you might not have checked in a decade.
Most people haven't.
But thankfully, because this system dictates whether or not you can literally participate in the modern economy, it isn't operating completely in the dark.
No, it's heavily regulated, which is really where your power as a consumer comes into play. Because ChexSystems functions as a consumer reporting agency, it is subject to the strict rules of the Fair Credit Reporting Act.
Whoa, okay.
Furthermore, it falls under the direct oversight of both the Consumer Financial Protection Bureau, the CFPB, and the Federal Trade Commission, the FTC.
Okay, so what does all that regulatory alphabet soup actually mean for you? It means they have a legal obligation to report your information accurately, right?
Ex
And they are legally required to investigate if you dispute something on your file. You have the absolute right to audit this data. And just like with your standard credit report, the law entitles you to a free copy of your ChexSystems report once every 12 months.
which is huge. Knowing how to access this data proactively is crucial. You really shouldn't wait until a bank teller turns you away to find out what's in your file.
Definitely not. So let's give you the exact playbook on how to get this report. There are 3 ways to do it, and it's actually surprisingly straightforward.
Yeah, they make it pretty easy.
First, you can do it online. You go to the ChexSystems website, register for an account, fill out your personal identifying information, answer a few, security questions, and create a secure login. Once you are in their portal, you navigate to request a report.
And when you are in that online portal, you actually have to make a choice between two different types of document.
Right, this is important.
You can request the consumer disclosure, which I highly recommend. This shows you the granular line item information included in your file, the history of returned checks, the involuntary closures, and a list of which banks have recently inquired about your history.
Okay. And what's the second option?
Alternatively, you can request the consumer score report, which simply shows you that numerical risk score ranging from 100 to 899.
Got it. So if you want to see exactly what the bouncer is reading on that clipboard, you definitely want the consumer disclosure.
Exactly.
Now, if you are someone who prefers a physical paper trail, maybe you're preparing for a formal dispute and you want hard copies for your records, you can request the report by mail. You just print out the designated form from their website and mail it to this exact address.
Yes, write this down.
It's ChexSystems, Inc., Attention, Consumer Relations, P.O. Box 583399, Minneapolis, MN 55458.
And it is often really helpful to have the physical copy if you need to review complex discrepancies with a financial advisor or a legal advocate.
Makes sense. And the third option is by phone. If you want to speak to an actual human being or if you just don't have reliable internet access, you can call them directly at 800-428-9623.
And their hours are pretty standard.
Yeah, the representatives are available Monday through Friday from 8 a.m. to 7 p.m. Central Time.
So the mechanisms for transparency are definitely there, but the real anxiety sets in once you pull that report and discover that you actually have a severe negative mark.
Great. You get the envelope in the mail or you open the PDF, and there it is, an involuntary closure from a bank you haven't even thought about in years.
It happens all the time.
What happens then? I mean, is this a permanent black mark? Are you just banished to the unbanked wilderness to rely on check cashing stores for the rest of your life?
Thankfully, no. This is where we need to look at the concept of redemption within the financial system. It is absolutely not a lifetime sentence.
Okay, that's a relief.
Negative banking information generally remains on your ChexSystems report for exactly 5 years from the report date.
Okay, 5 years is still a significant chunk of time, but at least there is a light at the end of the tunnel. And more importantly, if you review your disclosure and find something that is factually incorrect, say a bank reported an unpaid fee that you actually settled, or there's activity from an account that was fraudulently opened in your name, you have the power to dispute those errors.
Yes, you do.
You can submit disputes directly through their online portal, by mail, or even by fax.
And because of the Fair Credit Reporting Act, the clock starts ticking the exact moment they receive your dispute.
They can't just ignore it.
No. By law, ChexSystems has 30 days to investigate your claim. They have to contact the bank that provided the data and verify its accuracy.
And if they can't?
If the financial institution cannot verify the information, or if they determine it is out of date or incorrect, ChexSystems must remove it from your report immediately, long before that 5-year mark. The burden of proof ultimately falls on the system, not just on you.
Okay, but let's look at the harder reality for a second. Let's say the information is 100% accurate. You made a series of financial mistakes, you overdrew an account, ignored the letters, and now you are facing that 5-year lockout. How do you survive in a digital economy without a bank account for half a decade?
It's tough, but our deep dive into the source material reveals there are 3 main pathways back in.
Okay, let's hear them.
The first, and arguably the most structured pathway, is seeking out a second chance checking account.
Second chance checking.
Yes. Many credit unions and community banks offer these specifically for consumers who have a tainted ChexSystems report. They're designed to be a probationary platform. They allow you to deposit your paycheck and use a debit card, giving you a chance to demonstrate that you can manage an account responsibly over time.
Got it. And the second option?
The second option is looking for what institutions call safe checking accounts. These are inherently low-risk accounts. They give you a debit card for your daily digital transactions. But the crucial difference is that they do not offer paper checks.
Right, because by removing paper checks, the bank eliminates the primary mechanism of float time risk.
Exactly.
So if you try to swipe your debit card for $50 and you only have $40 in the account, the transaction is simply declined in real time. There is no pending check to bounce a week later.
Precisely. It severely limits the bank's exposure to settlement losses.
And the third option is relying on prepaid cards. Now, to be clear, a prepaid card is not a true bank account, and it can come peppered with, reload fees or ATM charges.
They definitely can.
But the best ones on the market today offer robust mobile apps, the ability to set up direct deposit with your employer, and basic bill pay functions. It is undeniably safer than just carrying your entire net worth in cash in your pocket.
Oh, without a doubt. They offer a baseline level of security and vital integration into the digital economy while you basically wait out the 5-year reporting window.
Okay, I have to jump in here and push back hard on something regarding those second chance checking accounts you mentioned first.
Sure, go ahead.
Because when you dig into the fine print on those, these accounts almost always involve monthly maintenance fees, strict minimum balance requirements, or honestly a combination of both.
That is true.
Doesn't that strike you as incredibly counterproductive, almost predatory? I mean, you have a consumer who was flagged by the system specifically because they were struggling with cash flow and overdrafts. They are broke.
Yeah, it's a difficult position.
And the banking industry solution is to penalize them by hitting them with more fees and minimum balance rules just to hold their money. How does pushing someone further into financial friction actually help them rebuild trust?
I get it. From a purely empathetic standpoint, it does feel punitive. But we really have to look at the cold mathematics of risk pooling from the institution's perspective.
Okay.
The bank is a for-profit entity, right? It's not a public utility. When they open a second chance account for someone with a documented history of unpaid negative balances, they're statistically taking on a higher probability of loss. Furthermore, these accounts often require more administrative oversight and compliance monitoring.
So the fees are basically an insurance premium the consumer has to pay because they are deemed high risk.
Exactly. The bank prices the immediate statistical probability of a loss into the structure of the account. Is it an imperfect, costly ladder back into the formal financial system? Yes, absolutely. But without the ability to offset that risk through fees or minimums, most banks simply wouldn't offer the accounts at all, leaving these consumers permanently unbanked. It is a harsh macroeconomic reality, but it serves as a necessary stepping stone to rebuild algorithmic trust.
The cost of doing business when your trust score is in the basement.
Pretty much.
It really is a complete paradigm shift from how we normally view our financial footprint. Let's zoom out a bit and summarize the journey we've taken today.
Good idea.
We started by uncovering the invisible mechanism of ChexSystems, which is the silent tracker of your deposit and debit liabilities. We learned that simple mistakes, unpaid fees, a string of non-sufficient funds can literally lock you out of traditional banking for 5 years.
5 long years.
Pushing you right into the expensive, predatory shadow economy.
But we also illuminated the mechanisms of control you actually possess. You have the legally protected power to pull your disclosure report annually, to monitor your score, and to force an investigation into any errors within a strict 30-day window.
Right.
And even if the negative marks are entirely accurate, there are concrete, albeit sometimes costly, pathways back into the system through second chance accounts, safe checking, or robust prepaid options.
You just have to know the rules of the game to stop the bouncer from ruining your night.
Exactly.
But before we wrap up this deep dive, there is one final lingering detail from our research that I think is going to keep a lot of people up tonight. We briefly touched on the idea of joint accounts, but the implications are massive.
They truly are. The data shows that simply owning a joint account with someone who triggers a banking problem can severely tank your own personal ChexSystems report. It is the ultimate guilt by association in the financial world.
So if you and a roommate opened a joint account 5 years ago just to pay the electric bill, and you moved out but never formally removed your name...
And then that former roommate falls on hard times, bounces a few rent checks, and abandons the account with a negative balance. The bank reports the failure to ChexSystems.
Oh, man.
Because your name is still legally tied to that account, your hidden banking score plummets alongside theirs.
That is wild. I want you, the listener, to really ponder that for a second. Think about how much of your individual financial identity, your literal access to the modern economy, might be secretly tethered to the current habits of other people.
The scary thought.
Your ability to walk into a bank tomorrow and open a simple checking account could theoretically be derailed by an ex-partner from a decade ago, or, a family member you tried to help out by co-signing a college account. We view our financial lives as these solitary credit scores we tightly control, but in reality, they're interconnected webs of shared liabilities, monitored silently by a system most of us never even knew existed until it was too late.
It is a profound reminder that financial hygiene isn't just about managing your own money. It is about aggressively managing who you are legally attached to.
A terrifying but necessary reality check. Check your reports, untangle yourself from old shared accounts, and take control of your hidden banking score. Thank you so much for joining us on this deep dive into the source material. We hope you're walking away with a completely new perspective on your financial footprint. Stay curious and keep exploring.